What's up, everybody? This is Jimmy with Trading Decoded. It is 4:03 in the afternoon. It is June 3rd, 2024. Please like, share, and subscribe. Let's get that out of the way. Thank you in advance. Today was started out a bit weird, slow, and then the market data got screwed up. Fortunately, that happened after most of us were done for the day. But I do want to show you a trade that we were able to find without the aid of SPY at all. So we were able to take a SPY trade without even having access to a SPY chart. Now, for those of you who don't know what I'm talking about, today there was some data issues on some stocks that affected some people. I was one of those people. My SPY chart froze for large portions of time shortly after 10 o'clock-ish, somewhere in that range. I think it started a little bit after, a little bit before 10. Either way, it didn't affect everybody. We were watching it on my live stream and it just stopped. Everything else was working that I care to look at, ADD and Qs, but SPY just wasn't working. So instead of being exactly zero help to anybody, we tried to find entries and exits, or at least I was trying to help people find entries and exits based on the Qs. And then I would ask the people who could still see SPY, hey guys, is this working? Is SPY going down? It should be, because this, and this is happening. I would hold on to those trades until we get to this level, blah, 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 blah. Now, for me, I took two trades today. My first one was a red trade, but a very, very small loss. And the second one was a banger of a trade. And I'll explain why, for not just me, but for many other people, it was as well. So without further ado, let's go ahead and get into the chart and take a look at what we were dealt today. So we have our pre-market, which was not very exciting. I mean, we had some reports come out at 8:30. I'm sorry, we didn't have any reports today before 9:45. So yeah, this morning's pre-market was staying pretty tame. And then we got this crazy rogue candle out of nowhere, but whatever the case was. Call line scenario was a candle close above 529.06. Put scenario was a breach of 528.66. Now, the one thing that a lot of people seem to fail to remember is simple. And this goes for any day of the week, any time. If Qs are on support or near a support level, I would recommend that you wait for that support level to break before you buy your puts on SPY. Now, I myself ignored that rule today, and it's not a surprise to me that my trade didn't work. I tried, I hoped for it to work. I didn't wait too long until it was a problem trade, but I took a small loss on it. And what we were looking for was not only SPY to be breaching our put line, looking for the move to continue down to our pre-market low line, or to our pre-market midline. Actually, we were aiming for right here where we had made support in pre-market for 528.50, okay, which ended up happening here. But the reason was why I shouldn't have taken that trade is because we established that this resistance had turned into a solid support. And guys, you're not going to want to take calls, at least this aggressively this early, until Qs close below this. Okay, because if they can close below this, we'd be hoping for the move on the Qs to bring us down to the pre-market midline. That never happened. And we tried and tried and tried. And even though the Qs were moving up, ADD was selling off aggressively, which was keeping SPY basically moving sideways. So we did, or at least I did, got into that trade right here and held on to it. I was in profit sometimes. I was in a loss sometimes. Profit, loss. Once I'm in these trades and they don't do what I think or hope that they were going to do within a short period of time, I start to get uncomfortable and I start to overanalyze. I start to think too much. And then if this trade goes against me, then I start convincing myself to stay in and why, and eventually you'll be right. And all these things, right? It ends up becoming a hold and hope situation. And I really try hard not to put myself in them, because not only am I going to potentially hurt myself financially, never catastrophic, but I'm also going to be doing it in front of hundreds of people. So I'm trying to not fall victim to the weaknesses that we all face as traders, right? So I ended up taking a loss on this. It was only $20 per contract. It wasn't an expensive loss, but it didn't do what I wanted it to do. We gave it a couple of minutes to try. Qs were just not giving us what we wanted. In fact, when the Qs started to move back up, started to put in higher lows, it's really when we started to say, guys, we're having a hard time moving lower on the Qs. If you're in puts, you have the opportunity to get out for break even, maybe a little bit of profit or a small loss. I would recommend that you consider doing that. I took my own advice here. Glad I did, because a pullback to this line, even though it ended up being a solid level of resistance, as it was showing us since pre-market, was fantastic. So got out with a small loss personally. So did several other people. A lot of people got into this trade early and made a couple bucks on it. I was looking for more out of it, so I did not. We pull back, proving this call line as a better resistance or a continued resistance. You guys see it here. You see it here. You see it here. Still didn't take puts up here. Why? Because Qs are trending up. I don't like to trade against the Qs. However, what I want you to take a look at is, what is ADD doing during this whole time? Do you see this? Okay, you see this right here? We were a plus 1,200, we'll call it 1,300 on ADD, and we were dropping into the negatives in a short period of time. That is massive selling in the market, guys. You can't ignore that. In fact, it's that selling, even though the Qs were moving up, that was keeping SPY tame and in a very tight range. So as we move down to this crazy level of support that has been holding since pre-market in regular trading hours, in this resistance, we were talking about how this is a channel, and that in channels, they're beautiful because you have opportunities to get in at the top of the channel, get out at the bottom, get in at the bottom, get out at the top, right? And we know when to get out. If the channel breaks and closes, if you buy puts up here and it closes above, you get out of the trade. You buy calls down here, it closes below, you get out of the trade. Otherwise, you get in at the top, out at the bottom. So while we're pulling back here, we recognize that this is looking like a lower high. We also recognize that Qs, albeit in an uptrend, which is something you always have to consider, is at resistance as well. So what happens here? Well, if you're going to take the risk on puts, make your stop loss the same reasoning you would make it here. If SPY closes above the call line, you stop out of your puts. If Qs close above this line of resistance, we get out of the trade. Otherwise, we're hoping it gets back down to this level of support at least. But then the question becomes, what is happening at 948? Well, at 948, Qs still have a fair amount of distance to go before they get back down to their next support. So that is what was leading us to want to stay in this trade, even though SPY got to this level of support. And that's what we said during the time. Guys, if you're in these puts, Qs still have a decent amount of space before they run into their support. And if that happens, it's going to bring SPY below this level of support. Okay? Again, ADD is already telling us that the momentum of the market is moving down. We just need Qs to make a move from here to at least here. And if that happens while ADD is moving down, you don't want to be in calls, because now your Qs and ADD are moving in the same direction at the same time. It's going to pull SPY with it. Okay, so we just needed the Qs to start to get into the same trend as ADD so that we could feel much better about not only buying puts, but holding on to them. So as you could see, Qs started to gain a fair amount of momentum. And when we start closing below these levels of support, we want to hold to the next support. So some people got out of this trade at 949, okay, which would have been on this level of support for SPY. So decent move if you bought in here, you bought out here. Now, why? The question is, why do you hold sometimes, Jimmy, through your lines? Well, I just explained, number one, the reason that I was interested in holding this trade longer, more importantly, till Qs at least comes down to their support, was also the fact that we were coming off of a lower high. support levels tend to fail, in my opinion, and from what I've observed, coming off of lower highs. Like, I would never buy a call off of this line. Doesn't mean you have to buy a put, but I wouldn't buy a call. As strong as this level was, we're also coming down to it for the first time off of a lower high. So for those of you who are waiting to play the put scenario, this candle would have given you the reason to consider taking the trade this time. Okay, but if you're already in a trade, I'm interested in the possibility of holding because the odds say that we are likely to break the support, not hold it. So once we got through that line and Q started to rack up some momentum and ADD was already doing its work, all we had to do was figure out how much money we wanted to try and take out of this trade. Now, while we were up here, we started to say, maybe we'll get a gap close. Let's aim for the pink line. The pink line is the stink line. The pink line is at 527.50. So in we get. A lot of people got out at the first line. A lot of people got out at this line. A lot of people got out through this line. A lot of people got out here. Some didn't. Some held more, and that's okay. We were running into a level of a lot of support congestion, we'll call it. I wasn't going to hold through that while we were coming down. I told everybody if we get to that pink line or if Qs hit their pre-market low line, I'm getting out of the trade, whichever comes first. They happen to be on the same candle. Q stayed during a pullback below resistance. A lot of people got into their trades at 954, okay, which is right here. And down we came. Beautiful move. That one right there was 113% winner. And that was if you didn't even get in aggressively here. I got in late to this trade and it still paid massive. This was a one and done for a bunch of people. And that was my second and final trade of the day. First one was slightly red. Second one made up for it massively. And several other folks in the community took that trade and were one and done. Then we had a pretty wild 10 o'clock candle. We moved, almost $2 or over $2 in a single candle. That was insane. I had some folks that were in puts still from here in through that. And at that point, you have no choice but to be a hold and hoper because you got to be massive red in a very short period of time. I don't even know that you could have reacted quick enough to get out of that trade unless you panic sold, in which case you probably took the worst of the worst on that one. But the reason we don't mess around reports, guys, especially 10 o'clock reports, is because it's been a long time since we've seen a 10 o'clock candle this aggressive, this big, but you get pretty wild moves and usually a pretty big influx of volume at 10 o'clock on SPY every day. Sometimes they're nothing burgers, but for everybody who's in our community, we talk about it every single day at 10 o'clock. Guys, if you're in a profitable trade, it's better to at least put a stop in so that if the 10 o'clock candle goes against you, you get stopped out in profit. Sometimes, especially on a candle like that, it might skip right over your stop because that move was super aggressive and super fast. It will skip over stops, okay? And it will fill you at really horrible spots sometimes too. It's better to not even take that risk. Now, for folks who are holding and hoping, they are more likely to hold through a 10 o'clock candle in hopes that it fixes their problem, okay? And I've seen it happen. We've all probably been in that situation where a report or something saves us while we're holding onto a trade, even though we shouldn't be in it anymore, provides the opportunity to get out. Sometimes it makes the problem worse. And with that said, it came right back down. We chopped along a little bit, right back down to our pink line. And this is when SPY started to get messed up for me. And this trade right here was, I had no SPY chart. We were watching this chart right here. Now, since then, the candles have all filled in, but I was frozen somewhere over here. I think I was frozen at 1023 with no SPY to look at. So I was telling everybody, hey guys, if the Qs can close below 452.87, I would be aiming for 451.45. And if that happens, SPY is going to move down. I was watching the Qs chart the entire time. Let everybody know if that happens, this is what you're hoping for. The only thing you got to watch out for is that the Qs don't stop at 452.48. Not only did it not stop, it blew right through it like it was standing still. And I did my best, my absolute best to hold people in this trade, telling them to please put your stops lower as we move down. We're aiming for 451.45. And if we get through that, we're looking for 451 even money. Guys, these lines were all drawn before the market opened. Okay. And they hit and they make great targets up and down. Okay. So this entire trade was taken, as was this one, without using SPY at all, but they were trading SPY. Okay, so if you look at SPY from 1046, which is right here, to where Qs hit that support, it happens to line up with one of our futures lines. Dude, that was a banger of a trade. Banger of a trade, and it had more left in it. But long and short of it is, the next trade we were talking about, because I was just asked slightly before this entry, guys, where would you buy calls, Jimmy? I said, man, that's a counter trend trade. So if you're going to try calls, I would not do it until the Qs can close above 451.83. 88. This guy right here. I said, because if the Qs could close above that, I'd be looking for them to make it up to their pink line. And I'm assuming that if that happens, SPY is going to move up as well. I still couldn't see SPY. I said, that's what I would do. And I wouldn't hold through the pink line, because in counter trend trades, and I also want you guys to notice, by the way, Qs were also coming off of a higher low. That's why I felt good about this particular trade. I said, if in a counter trend trade, I will take the move from line A to line B. I am not interested in trying to find a V-shaped recovery, time a full reversal. I'm still assuming that the sellers are stronger than the buyers in the market. If they're going to let us get from one line up to the next level of sellers, I'll be happy to take that trade. Okay. Now, I didn't take any more trades, so I have nothing to do with this. I'm just trying to help our folks, A, learn how to understand price action, and B, if they haven't yet taken a trade or they want to take an additional trade, here's what I would be looking for and why. We get that candle close at 11.18. Well, SPY also, you can get in at 11.18 because of the Qs. Remember, I couldn't see SPY, and when Qs made it up to that pink line would be where I would be aiming to go. Well, here you go, right? So we got up. This ended up being at least a 30% win, because I know somebody who got into this trade a little bit before that moment. Still in this candle, that ended up getting 38.3% return on that. Okay, so yes, a counter trend trade. Yes, expected to be short-lived, but when watching the Qs, you are able to take trades on SPY as well. It's pretty crazy, okay? After that, we were looking for the Qs to get through and close below this line of support, 451.45. This was right before I was getting ready to go to lunch. I said, guys, keep an eye for the Qs. They're putting in lower highs. We're going to hope for some support levels to break. What we'd like to do is get below support, buy a pullback to resistance, hopefully make it back down to 451. We said if we get through 451.45, we're likely to go down to 451. Now, could we have anticipated a candle like this? Absolutely not. You got into the trade because it was a pullback during a downtrend, looking for the move to go 45 cents down. You had no choice but to make a whole lot of extra money. Okay, now I wasn't here for this, so there's no exit here, but what I want you to see is that we got below that line and aggressively moved. In fact, we were talking about the idea if that happens, it was probably going to be aggressive. That was here on SPY. So not only did SPY close below its support that it had right here early, we came back, we pulled back to resistance, okay? And Qs had resistance as well during a downtrend. We're looking for the move down. Guys, this was a nasty move to the downside, even better than the opening one and the one after it that we found. This was nasty because the contracts are cheaper here, and boy, did they gain some serious value by the time they got down there. All right, again, I wasn't here, so there's no exit, But every time we move through these lines, we want to believe that it's going to move towards, doesn't mean it's going to get to the next line down. Well, we know where those are because we draw those lines, okay? The likeliness of a move going from 525 to 522.25 in a single move, very unlikely. So what you would normally want to do is try and find a pivot point or a 50% retracement in there. That's how I would normally find a spot for between big moves like this. I would have put a line here if I was at the computer at the time, and this would have been one of my target lines. So we would have gotten in here, and if we close through that, we would be hoping to get 50% of the actual level of support and resistance. Now, if you're wondering where that big gap comes from, let's get rid of this one that we just drew. We had, since we draw these in pre-market, we had a target line. That was a pivot point. That was a pivot point. Okay, so we were looking for the move. The next one down was a split candle right here. But nonetheless, it didn't make it all the way down there, and that's okay, because I don't know how much you would have made on that particular trade if you caught most of it. I mean, it had to be close to 200%, maybe more, maybe a little less. Either way, banger of a trade. Just needed to wait for levels of support to break, get in at pullbacks during a trend, and down we go. All right, and then after that, things got real slow. Yes, it was chopping up. ADD was making a recovery to the upside. If you look at ADD, it dipped, and then it started to move up. Not at an aggressive pace, not a big move. I guess it kind of was when you stretch it out a little bit. But once you start to see this happen, just realize it's a shift in momentum across the market, okay? You got to keep an eye on this kind of stuff. Once ADD starts breaking through these downtrends or uptrends, same thing can happen to the upside. I mean, you saw it right here. Okay, we rocket shipped early in the morning, one big green candle, and then she started to free fall from there. So just keep an eye on these things, guys. There's a lot of information to be had out there that could be very, very useful to you in determining whether you should get into trades, when you should potentially get out, when you should try and hold on to some trades a little bit longer. It's not just as simple as saying, I want to make more money, I need to make more money, or I can afford to take a bigger loss this time because I had a nice win earlier. There are ways to stack probabilities in your favor for all of these scenarios, both entries, exits, when to hold, when not to hold, when to skip trades. That's something we focus on very, very much often. Why we should consider skipping a trade even though it might look like a great setup. Okay, there may be some hidden thing back there. It's not hidden, you're just not looking at it. That should say, today was a perfect example. I did it to myself. I got into puts because we crossed a line, and I expected, because we did so, that we were likely to move down to a specific level. We crossed the line, it didn't move down, but I ignored the reason that I should have expected it not to move down. And we talked about it earlier in this video. It's right here. That level of support had established itself before the market even opened. It got tested on the first candle, tested on the second, third, fifth, sixth. I mean, it just wasn't going down. And when you see that happening, take a small loss or get out of the trade for break even. You don't want to trade against the cues. Now, the only thing that saved us, or saved this thing from taking off to the upside, giving us an opportunity to take the call line, was that ADD had already started diving down. So think of it as a tug of war between Qs and ADD. So you have the entire market, or small caps for the most part, drilling down, and you've got ADD going up. You will see this happen often. You will see a big green candle in ADD, and then at the same time, a big red candle happening on Qs, and vice versa. Okay, if that is going against each other at equal pace, or SPY will stay relatively flat. It's being pulled in two directions. It's when you get both of them going in the same direction, up or down, that you really want to consider getting into a position that's going to take that same direction. So if Qs and SPY or Qs and ADD are moving down at the same time, you want to find every reason to get into puts. And if ADD and Qs are moving up together, you want to find a good reason to get into calls. Okay? So we're going to wrap it up, guys. I hope you found some useful information in this video. If you did, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, there's a link down below. We'd love to have you. I am going to be offering the annual or the quarterly annual discount mid-month this month. And the reason I'm doing that is because I had a bunch of our members sign up in the middle of this month, and I'm trying to avoid them having a gap in their membership by allowing their monthly dues to run out, and then they're going to join the annual at the end of the month. So I'm trying to allow them to not have a gap at all. So this month, I will open it up second week into June. And if you'd like to join the annual, I will put that code out there for you. And we'd love to have you. And that's pretty much it. So till tomorrow, I hope you guys had a fantastic day. I love you guys.